GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's as gratifying as hitting all greens when you're running late. I'm your host, Jay Hamilton, and today we're talking all about staking and restaking and why it's about to become the next trillion-dollar industry. Best part, it's still fresh and misunderstood by many, even in the crypto world, and we love nothing more than something with massive potential that isn't yet well understood. So here to give us the inside edge on restaking is Karak Network co-founder Drew Patel, previously engineer at Coinbase, portfolio manager at 8 Decimal Capital, and CTO of Onfo Coin. Drew, welcome to the show.
Thanks for having me, Jay.
Super excited to have you, my man. I'm going to ask you the hardest but yet simplest question to begin. What is restaking?
Okay, so I think there's a lot of terminology that's sort of been invented to explain restaking and sort of make it so complex that people really don't ask questions. But for the most part, restaking is just staking again. What is staking? Well, people are going to say, oh, it's actually supposed to be proof of stake or whatever. But for the most part, we boil down staking to first principles. It's you're giving an asset. In exchange, you're getting rewards for providing the asset and locking it up. And then if something goes wrong, depending on the task you're sort of staking to, you can potentially get slashed.
The current craze around restaking is a lot around farming and points programs and opportunities. Is that what, looking at stats of Karak, you guys have achieved? You've bumped up over, you're around $1 billion in TVL. I think you bumped above, you're slightly below today, but you're hovering around that billion number in less than 3 months. Truly incredible. Shout out to you and the team. And you have 85,000 users, or just below 85,000 users, around that number. How have you achieved that?
So I think what we did, we came at the right time. I think we came with a different approach to restaking. Initially, it was just Eigen, right? And people are saying this is going to be the thing that's going to be embedded in Ethereum itself. Just like November, December, right? And they were thinking it's the next big thing. When we looked at it, we're like, there's a lot better way to do this whole restaking thing. For background, we were working on staking and a lot of staking risk. So we were trying to model out staking risk. We were on Ethereum. We were looking at slashing risk, seeing if maybe there's a way we can model it out so that we can help provide protection against slashing events. And then we looked at restaking and we're like, this is sort of the same thing. Like, again, you have slashing events and you're trying to model the slashing risks. So we looked and we're like, I think there's a better way to do this that makes a lot more sense for everyone. And so when we went to the drawing table, what we looked at was like, okay, let's make a very simple restaking. Like, what is restaking? Let's just ask ourselves that question. What truly is restaking? Again, it's providing assets that can be slashed and arbitrary tasks that you want people to do in a distributed way, right? I actually think that's a better way of me explaining it than I did in the beginning. How do we make this super simple and super unopinionated? I think in an effort to appease signal ETH alignment, I think decisions were made to say, hey, look, this is only going to be on Ethereum mainnet. ETH is the best, and their opinion is ETH is the most pristine asset for restaking. But our view is, hey, why can't you use any asset to restake, right? Why can't governance tokens be used to restake against things that are very specific to this protocol? Let's take, for example, like GMX, right? On-chain perpetuals exchange on Arbitrum, right? If GMX decided, and I think in the GMX 2.1 version, they allow for custom oracles, right? Now, say they wanted to make their own oracle that is, like, if they want to make their own oracle as a DSS on Karak, right? What asset would they want you to restake with, right? They could do ETH. But then, like, yes, and you can make the argument, oh, ETH is most pristine collateral, but why can't they use GMX token? Why can't they use the GLP token, which is like the basically the market maker? Why can't they use USDC? Why can't they use Arbitrum? I mean, it lives on Arbitrum and a few other chains, but primarily on Arbitrum. Why can't it use Arbitrum? And this sort of allows you to build staking into tokens that may not otherwise have staking, right? So our whole idea is, why can't any token, like, economic security is literally just dollars. As long as there's liquidity and there's dollars, of course, you can't create $1 billion of a token and have $1 of liquidity. Like, hey, it's $1 billion of restaking. But as long as there's sufficient liquidity for the token, why can't you use it for like restaking? Like, what's actually a proper reason versus, hey, we're trying to signal something? And so we asked ourselves a question, and the answer was, there is no reason you can't use any token here. Second question we asked, it was, why does it have to be on Ethereum, right? We have a lot of EVM chains. We have a lot of non-EVM chains, Solana. The thing that we want done in restaking can be done, felt not only on Ethereum, but felt everywhere on all these chains, right? We're trying to create these tasks and we want to decentralize the execution of the tasks. So why make it only work on Ethereum? Why deploy the contracts on only Ethereum? Why make it so you have to restake, natively stake, and build components that are very married to Ethereum mainnet? So asking these two questions, why only ETH and why only on ETH mainnet? We're like, we can build a way better solution. So we looked at it from first principles and we're like, look, let's make it super simple, like 2 contracts max. Super simple, right? Make it super extendable. We don't know the use cases that people want in 2 years. Let's not take an opinion on how it should be designed. Let's make it super unopinionated, super extensible. So it can dynamically change based on market needs. So there'll be native restaking, right? If it's deployed on Ethereum mainnet, you'll have native restaking. If it's deployed on Arbitrum, it can accept ARB token. And Arbitrum has a proposal right now for staking. Maybe you can build on top of that. So you can stake on Arbitrum and then you can restake it on a Karak DSS. So make it deployable on any EVM chain, the contracts. Let them use any asset, whether they want natively staked, just at ERC20. If they want to use some custodian, infinite possibilities. Ultimately, it's up to the AVS or the DSS to be like, hey, this is the asset I want. I'll take ETH. I'll take USDC. I'll take the governance token. It's up to them to really decide. So to answer your original question, I think we took a very obvious stance that many people were asking silently, and we took it at the right time. And I think that's what allowed us to grow that fast to $1 billion in TVL. And I think it's become sort of the widely after we were launched, I think everyone started saying, hey, this makes sense. Why can't any token be used? What's actually the reason? And don't try to nerd snipe. It's not you don't need to write a whole academic paper trying to prove why this is the only asset. Why can't any we built DeFi so we can build money money Legos, but we're gatekeeping it to only one asset. Why? And that's the philosophy of the company. As a whole, it's we look at things from first principles. We're trying to make it super simple, super developer friendly, so that we can really achieve the goal we're looking to do. And as you said, make things make tasks that are currently centralized and make them more decentralized. And I think that's why we grew so fast. Everyone's like, "Yeah, this makes sense. Let me hop in."
Yeah, it feels like even the milkman was like, "Duh, obviously, come on." Okay, so I want to talk a little bit about the players and the competition here. And you've already brought it up a few times, and this is a good segue because you've clearly explained Karak's view and Karak's value proposition. Can you give us sort of an overview of, you've mentioned Eigenlayer a few times, and Symbiotic is getting a lot of hype right now, which is sort of like Lido's backdoor entry into restaking. What do you see when you look at the competition in terms of the differences? But also, I think one of the keys here is time. How far along are each of these players when we're really talking about an industry that's only been around for a year, on the restaking side? How far along is each, and how does that play into the way you think about the landscape of competition?
It's not as black and white as you think. I think there's a lot of politics, I think, that are being played, right? Everything's public. It sort of is synthesizing everything, right? Because originally when I think Eigen did their round, there was some thread or something, and Paradigm funded a symbiosis. You had the origin of some of the conflict between these two, and then we're the third person in the middle of two parents fighting, right? Because if you think about it, right, Eigen let you natively restake, meaning that you put raw ETH into a validator and you stake it with Eigen, right? And then you have people building LRTs on top, basically wrappers on top of native restaking. What that means is, okay, if you want to participate here in native restaking, you need raw ETH to participate. Yeah, they accepted a little bit of LSTs, but the caps were met so fast, it was negligible. So basically, you need raw ETH to participate in their points, in the Eigen points farming, and in the LRTs, right? And so what that meant was, who is the largest on-chain holder of ETH? Not a person, contract. It's going to be the Lido contract, right? So that's STE. So a lot of the STE started coming out of well, not a lot. If you look at the charts, it wasn't a huge amount, but they were losing some amount of ETH to Eigen, right? And so you sort of needed a response, because if Eigen's whole thing is, we want ETH pristine collateral, natively staked to our eigenpods. That can't really coexist with ST ETH because you need to unstake ST ETH. You need to sell it and get ETH and then deposit it, right? So it became I feel it became an existential crisis for Lido because like your business is keeping the ETH locked in, right? You need to keep and grow ST ETH, and if there's something that's taken away, then you need to respond, right? I think Symbiosis sort of was that response to that. And then our viewpoint is we don't really have a horse in the LST race, right? We don't run our own LST. We accept ST ETH. We accept the LRTs, right? Because our position is, hey, this is a massive problem. If you're sitting here thinking about the LST part of the stack, and you're trying to vertically integrate, you're going to lose focus on the restaking part. And so again, our position is any asset, and we're not really an asset issuer. We don't issue all these tokens that you can accept on Karak. We're not an LST issuer. We don't run our own LST infrastructure. We're providing the really, really good restaking infrastructure that people can build on. And you can use any token, right? If you want to use the Eigen LRTs, you can use the Eigen LRTs. If you want to use Eigen governance token on Karak, technically it's possible. I'm not here to tell you can't, right? That's decentralization. Like that's the point of decentralized, permissionless. You could do what you want. I'm not here to tell you you can't. And so again, our whole focus is creating a really, really, really good developer infrastructure for restaking, right? Because this is a massive vertical. If you're focusing on the entire stack, you're gonna suck at everything. That's our opinion. And so yeah, now where is everything at? On the Karak side, on our V2 is steaming ahead. We got audits and everything coming in, and we're really making sure, hey, we're onboarding good partners that can build nice, sustainable DSSs, and we can give them really a nice white glove service. And that's my sales pitch to anyone listening that's interested. We give you nice white glove service. If you're building on Karak, you're talking with me. You're talking with the other core engineers that built the protocol, right? You're not talking with an integrations engineer that's 3 levels down from the guys designing the protocol, right? We're deep in the mud. So if something sucks, I will have to deal with it because I need to continually respond and fix it, right? And so that's just us being good developers, building good SDKs, building the liquidity, building the infrastructure so that people can easily build DSSs and scale them to their needs. The other thing that's, I think, one of the things we recognized because we were the second player is that we were able to see, hey, there's $22 billion or $15-20 billion in Eigen. How are you going to produce yield on that amount of capital? That's a lot. Again, you need to produce a competitive yield too, because again, the risks are a little bit more, are a little different than the staking risk, right? So you need to produce a pretty sustainable yield here, and you need to do it for a long period of time. Else the capital is going to go rush out once the farming is done. And so we just took one important measure, which is we started capping deposits at $1 billion. First, let's not put the cart in front of the horse, right? You need to build all the infrastructure. You need to get everyone lined up and deployed before you start really scaling the capital. Else, the chart sort of looks like this. You don't want the chart to look like this. You want the chart to look like this, right? So we're like, hey, let's cap it at $1 billion, and then let's really make sure we have our ducks in a row. Let's get all the DSS teams aligned, Wormhole being one of them that we announced today. Let's get them aligned. Let's get them building. Let's make sure everything's rock solid. SDKs are rock solid. Contracts are very secure and audited multiple times. Let's get them putting their proof of concepts out there, and then we can sort of raise those limits and really let the capital come in as is needed versus for hype. But yeah, that's where we're at right now. I think for the most part, all three are in the same place. It's really a question about how much stuff they're managing. We've tried to minimize some of the stuff we're managing because we really want to focus on just creating a really good product for our end users, which are developers that are trying to extend what they've built and make it more decentralized. And so we're really focusing on making sure we can serve them instead of playing politics.
Yeah, and it's fascinating to bring up the point that you have the benefit of being second. And if we look back in history, it's very often not the first that ends up winning in the long term. The first is they deserve all the credit for the being first, but they make a lot of mistakes because they're first because you didn't have any hindsight. You didn't know. And you guys have that benefit. I want to talk a little bit. I want to talk about points and Karak's points program. So we're going to come to that in a second because I think our listeners are going to be really excited to learn about that. But I just want to talk a little bit about the demand side, which you've brought up. Is the main question about restaking is around the demand side of the protocols who want to use restaking to secure their networks, because there's so much value locked in restaking. But then, is there enough demand to actually use it all? What are your thoughts there?
Yeah, you have to really consider demand, because I don't know many situations where you need $5 or $10 billion economic security. I really don't. Maybe a lot of Cosmos chains that are secured with a lot less. Okay, so I don't know how many, like how much. Like, if you really need to go into the multi billions of economic security, at that point, people will make the argument you just build the L1, right? Um, so our view is, hey, you need to create a sustainable yield. You need to be able to create limits and create lock-ins, and that, and I'll explain more in a second, but that will sort of enable a sustainable economy. By limits, if you have a successful AVS or a DSS that's actually producing a decently sustainable yield, the capital will come flowing in. Pretty obvious, right? Okay, once the capital comes flowing in, now if it's double the capital, the yield's half, right? But you don't even be utilizing this additional capital. Our view is a lot of these systems will have caps or deposit limits where they'll be like, hey, I only need $1 million of economic security. Or I'm building something small, I only need $100,000 of economic security. Once you have a cap, then you can then pay a sustainable yield, because you know exactly how much, like you're basically saying, hey, this is what I need and this is how much I'm willing to pay. And the market will be like, if it makes sense, it'll fill up your cap. If it doesn't make sense, then you can readjust, right? Second is duration, right? If I'm building a DSS, I don't want to be woke up in the middle of the night because half my stake was taken out, right? And if, for example, if you're a bridge and you're using economic security, it's not a great situation where you have a bunch of transactions being bridged because something new launched on a new chain, and then half the economic security, half the stake or half the restake is just taken out. So if you can create a mechanism where they can set the limit for how much they want to take in, which is super simple, it's one line, and then you create some fixed income mechanism where people can basically lock in for a duration of time, and they're guaranteed some set amount of reward. You can actually create a sustainable market with that. For the AVSs, for DSSs, they have a set amount of economics. They know their needs, and those needs are met for a duration of time. So they can, and after that duration, they can plan to increase, decrease, change the rewards however they see fit. They can plan ahead, and then they can focus on making their DSS or AVS better and improving it and improving their offerings, versus sitting there trying to court more and more TVL over and over. TVL games are almost zero sum. Like, okay, you're gonna play TVL games the entire time, but it's not gonna make the thing that restaking is trying to achieve better if everyone's just trying to take TVL from each other. Um, but that's the way we look at the sustainable model. It's like you need to allow DSS to have two features: get users to lock in for a certain amount of time and for a fixed amount of yield, and then it's off to the races, I think.
It sounds so obvious when you say it, but this is why it's so new. Like, what you're saying is, like, I think 5 years from now, it'll be, oh yeah, that is the exact playbook that will be used. But because it's so new, we're still figuring this stuff out. And it's wild to be in the space where, yeah, it's so funny when something so obvious is so right. I want to talk a little bit about the opportunity for investors and for our listeners. Uh, and you can talk about any opportunity you want, but I'm leaning towards Karak points being the opportunity that I'd like you to discuss. But feel free if you see other opportunities to share that as well.
So Karak, right now we have deposits open, so users can deposit not only ETH, ST ETH, they can deposit stables, things like Athena, USDC, etc. They can even deposit BNB, wrap Bitcoin. We offer quite a few assets. Again, it's because we believe in allowing people to restake any asset, right? So if you have those, you could deposit it into Karak, and the points will accrue. The other opportunities, I think, are if you're building, right? If you're building something, if you're building an AVS and you're compelled by the positions I've stated, and how we approach this whole restaking environment, you can reach out. If you're a protocol that hasn't explored it, reach out, because we can help you. We can walk through parts of your model where we can potentially introduce some decentralization. Wormhole is a great example of that. And yeah, if you're just a regular consumer, like look into you come read our docs, read some of the stuff we post. We're not going to publish research papers. We don't even have a white paper because we're like, the concept is so simple. There's no need to add jargon. There's no need to stretch out what it really is, right? This is in the end creating great developer infrastructure, creating great document creations, creating great SDKs, and and creating a marketplace for Slashable security. But your developers are your customers. So that's our focus. We don't care about writing papers. We don't care about writing massive white papers that few people read. We're creating things that a bunch of engineers will look at. We're creating very simple, straightforward guides that retail can look at, and even the institutional guys can look at and have a clear understanding of exactly what's happening, what are the risks, and how do I participate. But yeah, that's sort of my little spiel.
Any timeline on your points program?
I can't say any end or anything like that, but you could see from our philosophy, like look at our philosophy here. We came out 2-3 months ago. We were able to achieve $1 billion within a few weeks. We're a fast moving team. We're not getting deep into politics. We don't really care for that. We're delivering the product super fast and glean what you want from that. We're hustlers. We're here to deliver a great product for users, and we move fast. So you glean whatever you want from that.
Man, I love to hear it. Anybody who comes on the show and tells me they're a hustler, I mean, right on. All the power to you. That's exactly what we need more of in this world. Okay, final question. For those who are on the builder side and would like to get in touch with you or your team, how do they get involved? How can they reach out to you or to the rest of your team?
Yeah, so I mean, we're super accessible. Like you can reach me if you really want. You can DM us on Twitter. You can DM the Karak Twitter account. You can if you're an operator, basically, if you run validators and you want to become a validator and be an operator on Karak, we have an operator forum on our site. You can reach out to team members. Yeah, like reach out in whatever avenue you have. We'll put you in touch with the right people on the team, and you'll go right to the top, basically, right? So we'll bring you right to the top, and we'll help you out coming up with a solution. Figuring out what your needs are, etc.
Right on. Well, I won't put your personal Telegram in the show notes, but I will put Karak's Twitter, and we'll have some other links in the show notes for those that are interested. We'll also have a link to Karak's website and where you guys can go if you want to deposit some of the tokens that they accept right now and get involved in their points program. It's a great opportunity, which we have been pushing to everybody listening for a while now. If you're not staking, you should definitely be staking. And if you're not restaking, I think after listening to this episode, you're going to want to be doing that because there's just so much potential here and so much opportunity. And we're just getting started. Drew, shout out to you and your team. Thanks for all your hard work. Excited to see where you guys go in the future.
Thanks for having me.
Thanks for listening in, everybody.
Thank you for listening to Milk Road Radio, the easiest path to get smarter about crypto. If you like this episode, share it and hit subscribe or follow so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, then we'll leave a link to Milk Road Pro as well, your #1 resource to help you invest successfully in crypto. One final note, this podcast is for educational purposes only, and nothing we say is financial advice. Crypto is risky, so you should never invest more than you're willing to lose. Thank you, friends, and we'll see you in the next one.